we've been very, very pleased. Of course, BlackRock and Fidelity are number one and number two. They're converting their existing client base from GBTC into their own funds and attracting new funds, of course. But we have a disproportionate amount of new funds coming in onto our platform.
Hey guys, welcome back to Everyday Finance. In this video, Cathie Wood discusses Bitcoin and other crypto. According to Cathie Wood, Ark Investment was hopeful that GBT was providing shares for them to invest in, ranked among the top 3, because they are confident that 3 ETFs will emerge as the ultimate winners, go against the majority of predictions, and challenge some strong opponents, big corporations. They rank 3rd, and her figure exceeds 2.1. They have reached $1 billion now, so they are very pleased with BlackRock. Of course, Fidelity and another company are leading the pack in converting their current client base to GBT, managing their own funds and attracting new investments. Of course, however, they possess an unequal amount of new funds. Upon entering his platform, Ark users may not be familiar with all the details, but they are aware of their financial situation, planning to convert from GBTC, and it's recognized as a very small investment. What percentage of their current holdings is from GBC and other sources? Platforms that have the potential to convert, but it depends on what they are converting. Transitioning from GBTC to ARKB, approximately 100 million were moved out of the total 2.1 billion, and lots of things Cathie Wood discussed, so please watch the video to end. And share this video and subscribe our channel Everyday Finance. Thanks.
Well, I guess what we were hoping is that as GBT was ceding share, that we would be among the top 3, because we believe that 3 ETFs ultimately will win, and we are, against most expectations and against some very formidable and much larger companies, we are number 3, and actually our number is over 2.1 billion now. So we've been very, very pleased. Of course, BlackRock and Fidelity are number 1 and number 2. They're converting their existing client base from GBTC into their own funds and attracting new funds, of course. But we have a disproportionate amount of new funds coming in onto our platform. Well, of course, we don't know all of that, but we knew how much we were going to convert from GBTC. So, and we know that it is a very small percentage of what we now have. Has the rest come from GBTC from other platforms? That's very possible. But in terms of what we were converting internally from GBTC to ARKB, it was roughly 100 million out of the 2.1 billion. Well, and before I answer that, I do want to give a lot of credit to our partners in this David versus Goliath battle. 21 Shares is the infrastructure and ops of ARK 21 Shares. And then Resolute is our distribution partner here in the US. So have to give them both lots of credit. And of course, our team, our incredible research team as well. So that done, do we agree with Michael Saylor that ultimately this category, Bitcoin and other crypto assets, could be bigger than SPY? Yes, we do. Absolutely, we do. And Bitcoin alone is going to be the biggest part of the entire crypto asset ecosystem. Our expectation out in 2030 that it will be a $20 trillion. It will be worth $20 trillion. Now, how much will ETFs get of that $20 trillion? I don't know, but that already right there is, if you think about it, I mean, it runs circles around SPY, number one, and I believe all of public equities globally, no matter what wrapper they're in, are valued right now at roughly $120 trillion. So when I say 20 trillion by 2030, that's a very big category.
Bitcoin and other cryptocurrencies have the potential to surpass traditional investments like the S&P 500. ARK engages in Bitcoin transactions, which will be a significant part of the overall picture in the crypto asset ecosystem. The outlook for 2030 is that it will be so. A $20 trillion investment would be worth $20 trillion now. How much would it be worth? ETFs make up a significant portion of that $20 trillion. Cathie is not sure, but that's already a good start. When considering it, it outperforms SPY number 1 by a long shot. Cathie Wood believes in all public equities globally, regardless of the sector they're in, currently valued at approximately $120 trillion. So when she mentions 20 trillion by 2030, that's a significant category. Currently, all the ETFs in the market hold approximately 3.9%, or approximately 4% as of today, with all the Bitcoin outstanding now. The really intriguing aspect of that is that when examining on-chain analytics, ARK analyst David Powell provides valuable insights for us. Well, long-term holders make up, she believes, a significant portion. Around 15 million Bitcoins are currently outstanding. Roughly the total outstanding amount currently stands at 19.5 million, with the total amount expected to be only 21 million outstanding, and long-term holders are not selling. What is the current price situation and the inflow of funds? ETFs have made it easier to purchase Bitcoin without any hassle, can be used as collateral for loans. Unlike Bitcoin, it's clear that you're aware of the recent increase of 1.5 million Bitcoins will need to address various investors, institutions, and so on. In other words, the price will need to increase sufficiently to balance out the supply, removing some of the supply from long-term holders' hands. And just to clarify, investors who hold onto their assets for extended periods have not transferred their Bitcoin from their wallets, which can be monitored on the blockchain. Approximately 155 days from now, the likelihood of that happening increases. Bitcoin's value is expected to drop significantly unless there is a sudden price surge. Let's back to the Cathie Wood interview. Wood.
Okay, so all of the ETFs out there right now hold about 3.9%, roughly 4% as of today, of all the Bitcoin outstanding. Now, the really interesting thing about that is if you look at on-chain analytics, which our analyst David Powell does for us, you'll see that long-term holders account for, I believe, 15 million of the Bitcoin outstanding, roughly 15 million. Total outstanding right now is 19.5 million. And the total that will ever be outstanding is 21 million. Those long-term holders are not selling. That's what's going on with the price right now. And the flows into the ETFs which have taken the friction out of buying Bitcoin, and which can be used as collateral for loans, whereas Bitcoin itself cannot, suggest to us that, that added 1.5 million to go in Bitcoin is going to have to cover a lot of investors, institutions, and so forth. In other words, the price will have to go high enough to wrest the supply, some of the supply, out of long-term holder hands. And just to clarify, long-term holders, and again, you can track this on chain, they have not moved their Bitcoin from their wallets in at least 155 days. And when that occurs, the odds that they will move their Bitcoin go down dramatically unless the price spikes dramatically. Yes, so the halving. So we'll go from roughly 1.9% growth in Bitcoin supply per year down to 0.9%. So we will drop below 1% for the first time. And if you look at the long-term history of gold, very long-term, what you'll find is the average supply growth has been roughly 1%. So now Bitcoin supply growth is dropping below the supply growth of gold. That is a milestone, I would say. And the other difference here is when the gold price spikes, there's usually a mining response and the supply spikes with it. That cannot happen with Bitcoin. So it's quite a different dynamic. So the halving is that milestone. And if you look historically after halvings, it's usually been very good for the Bitcoin price. Now, it doesn't happen right away. I don't know why it doesn't happen right away, but it doesn't. Now that the market's becoming more efficient with ETFs, it might, because think about how many people even know about the halving this time around when they didn't even know what Bitcoin was 4 years ago. They didn't know what it truly was. And if I can just throw one in terms of how we try and describe what this monetary revolution is, and each one of these words is important. The first, global, that's critical. Private, no government oversight. Digital, decentralized, rules-based monetary system in history. It is what my mentor, and many people know Art Laffer for his Laffer curve and fiscal policy and so forth. He's a monetary scholar as well. And he said, I have been waiting for this for 50 years, ever since they closed the gold window here in the United States in 1971.
According to Cathie Wood, the growth in Bitcoin supply per year will increase by approximately 1.9%, decreasing to 0.9%. We are about to dip below 1% for the first time. If you examine the extended history of gold, you will notice the typical increase in supply has been around 1%. And now Bitcoin's supply growth is falling below the supply growth of gold, which is a significant milestone for Cathie. Another notable distinction is that when the price of gold surges, typically, mining responses trigger supply spikes, but that's not the case with Bitcoin. It operates on a different dynamic, making the halving a significant milestone. If you learned something from this video, then please like this video and subscribe our channel Everyday Finance, and we will meet in next video. Thanks.